So we talked about the top 5, and now we're going to build assumptions around those top 5. So for revenue, I work with a lot of clients who maybe they work on a contract basis, and they have a list of signed contracts, and then they have a list of hope to get contracts, or what do I need to get to make the same revenue as last year? And looking at history 1 year back is a good reference point if you really are like, I don't really know what's going to happen this year. And so if you have that, and most business owners I've been talking to, they have most of it. So now you just want to stretch it out. You have the list, but when are you going to invoice those people on the contract? And you start sticking that revenue in the appropriate months. And that becomes your revenue projection. Then you're going to do the same thing. A really quick way to do cost of goods sold is you're going to look back at that report, and you're going to say, what was the percentage last year of cost of goods sold divided by sales? Whatever that percentage is, that's going to be your assumption for this year. And so you're going to do an equation, and it is going to be revenue, whatever's in the revenue box, times that percentage. And that's going to fill in the number for you. Every time you change the revenue, it's going to correlate with that cost of goods sold. So now you've already done 2 things. Now, the next 2 are the people. You just start making a list of who the people are and how much you pay them. Generally, if you're on payroll, you get paid either every 2 weeks or twice a month. Figure out what that number is. If you want to do it really simplistically, add up the number, divide by 12. It's going to be close. Put those in the boxes. Most of the salary people are going to, or all the employees are going to work all year. Maybe you have some seasonality in your freelancers, but you do know the answer. So make the list of the people, do it rough cut, divide by 12, stick them in the boxes. There you go. Freelancers, same thing. Now technology, super straightforward. You're going to look in your financial system. Better to look for the whole year of last year, but you can just look at the 3 months of this year. And you look for the row that says subscriptions, and you dig into the detail. Click the button to transaction detail, and then you're going to sort by vendor, and you're going to list it out on a piece of paper. Do I pay it monthly? Do I pay it quarterly? Do I pay it once a year? Should I be paying once a year? And what should I be canceling? And you're going to look at that, and that's your set of assumptions. The bottom number, when you add them all up by month, you're going to stick them in the spreadsheet. And now when you're done, you are going to have a rough guide to where you're going to end up at the end of the year. So if you want more information, please check out our website at vilmsconsulting.com. There you'll find a ton of information, but you can also email us at info@vilmsconsulting.com. We're happy to have a conversation with you about how to do forecasting, how to understand your books, and really make you have a successful year.